Good morning. NYSE gap open up. Price MasterCard, big gap on the earnings. You have some other ones that are earnings related. Devon Energy, Mosaic is in there with some chatter around. Caterpillar with some chatter around. I'm sorry. Caterpillar's a great stock. However, with the contraction in Europe and China contracting a little bit, Caterpillar has lower price levels, but they're tradable. The short squeeze from yesterday is in play on the gap open. The job challenger report was better. This is the NYSE. Trade management will not change. Once they do put in their highs, there will be no buyers up there at their upper delta target ranges with distribution bars. That at that time will be the perfect time to hit those shorts. The gap open down list, which is earnings related in here and headlines, is diminishing. We are short-term oversold. We've had 8 down days in a row. We're going into a major report on Friday as to what the unemployment picture and jobs and everything is going to look like. Contagion, Italy having a problem in the banking thing, they kind of recovered overnight. Volatility is volatility. Volatility to the downside, volatility to the upside. Both of equal weightings. More selling has been in the market in 8 days than buying with the bulls. The bull sentiment and the pessimistic levels and the contagion levels are getting at extreme highs. That's where you get these great trades off the bottom and the short squeezes happen. And any kind of news that can be manufactured or in any headlines is that in the shorter macro environment, that the ranges called range today will be put in and the gaps will be sold on the highs. The first part of the hourly trade will be how they consolidate the gap, or is it an immediate distribution gap, a sell gap. They gap it, they sell it, there's the red bar, it comes down 369, it bounces up 2 teenies with another red distribution bar. You would be looking for greater red bars. So you have one and you have diminishing price movement back up, and then you have a failure. That means that the failure comes at a lower high within the intraday opening high of the opening bell. There'll be a lot of electronics, good till cancel orders that get and program trading on the NYSE that will happen. We remain selling gaps into resistance. Why? Because the bigger money is selling into rallies and not buying rallies. So artificial price movement and pre-market and futures and different kinds of futures are used to create these artificial prices on the opening bell, and then they're met with distribution. Trade management will remain the same. Consolidations will be monitored carefully in price action on the trading day, and we will see if another round of sellers want to hit the tape. We did the indexes. We will look at the indexes. We are getting what we call oversold conditions in a lot of indexes and certain names within the shorter time frame in the actual structure of the price structure of the trade management. So everything remains the same. Everything remains the same. And what we're going to be looking for is where that fear, both in the VIX and the VXN, if it stays elevated and or goes higher, then equities break their lows. And if that fear indicator remain at elevated levels, it means that people are not coming off the sideline. There's no exuberance. Actually, it's quite the opposite. So the pessimistic side of things increase versus the bull exuberant. So understanding bull exuberance and bear pessimisticness within the overall range today is what we do, and that's all we care about, is what the range is going to be. So this MasterCard is heavily shorted, and the bears are trapped below the market on the opening bell. It's going to go up, and it can remain fairly decently strong, but over the next several trading days, you are coming down. You will not have that $11.50. And none of the earnings that have come out, whether it was Apple and a lot of good earnings that came out in the quarter, they're not holding their post-earnings highs. Trade management remains the same.